Well, it's just the beginning. Nigeria's FMDQ OTC welcomes UBA's 30.5 billion naira bond listing. CNBC Africa's Christycole Popoola spoke with the CEO, Bola Onadele.
This is history. It's the first time in Africa, in Nigeria, that bond is being listed on an OTC securities exchange. On the back of the approval from the Securities and Exchange Commission last year, FMDQ OTC, as we're known, was permitted to list bonds and other fixed income instruments in Nigeria, bringing to bear the innovation and game-changing ideas of the Securities Exchange as a way to drive its revolution in the Nigerian debt capital market.
This is obviously the first corporate bond listing on the FMDQ platform, as you mentioned earlier. Do you have strategies in place yet to attract more bond listings?
Definitely, that's our goal, and we would like to be the debt capital market securities exchange, the first in Africa and branded to list as many as corporates and drive the revolution in the debt capital market in Nigeria. We're aware of the infrastructural gaps in Nigeria. We also are aware of the regulatory changes all over the world, the Basel III, which would definitely promote a lot of corporates to list on an exchange like FMDQ. The first thing is value, and what we bring to this market is prestige and value. Value for price formation, value for market transparency and liquidity. The FMDQ Gold Agenda speaks to global competitiveness of the market. All the issuers, the bonds, we enjoy tremendous liquidity on our platform, transparency, and also for investors who, in today's world, value information. So we do not want bond investment to stop at the primary issuance. We're very particular about the secondary market, price formation, market transparency, and operational excellence to support this. And we cannot forget that in today's world of volatility, uncertainty, complexity, and ambiguity, risk management becomes important. So one of the value adds we bring to the fixed income market in Nigeria will be derivative products, bond futures, treasury bill futures, interest rate futures for investors and issuers to hedge and provide them with financial security.
Now, you mentioned transparency as part of efforts to attract more bond listings to your platform. Now, what are your plans to ensure that these bonds, when listed, are traded actively and transparently or fluidly transferred, as the case may be?
First thing we did when we launched November 7, 2013, was actually to launch the institution with its daily quotations list. So we have a market services group that day in, day out, think of the best products to give to the market to offer market transparency. With the daily quotations list, for the first time in the history of this country, we have a report that gives to that brings uniformity to valuation for bond prices. It's never happened before. That was done November 7, 2013. Immediately that group settled, they also developed the market activity report that provided the market, investors, issuers, and corporate treasurers with the activity on every security, the amount, the value traded, the high price, the low price. And you think of the value that brings to the control function, where corporate treasurers, their internal auditors and compliance can check that prices are valid market prices. This was unprecedented in the country, and it was done in FMDQ. In terms of liquidity, what our business development and market development groups have done was to develop the idea of specialists for different bonds. So the dealing members, and you know our dealing members are banks in this country, and we plan to integrate other security dealers, have decided to offer specialist service to some of these corporate bonds to ensure liquidity. As bond specialists, they will sign up and give and make market to drive the sort of intensity we see in the federal government bonds along the corporate, subnational, supranational bonds in this country.
Before I let you go, I'd like to know what's your view on bond issues as alternative to equities capital in the current market situation?
Well, it will never be perfect alternative. Equity is equity and debt is debt. If you look at countries that have developed, you require a leverage. And that also speaks to market value even for individuals and companies. You require an amount of debt to improve on your market valuation. And that is what we see Debt will complement equity. It will never replace it. They're not perfect substitutes. So even if you issue debt as a Tier 2 capital for some institutions, you also need to focus on your earnings per share. Capital will be important, core capital, Tier 1 capital. It will never be an alternative. It is complementary, but we require an amount of leverage. And in this country, we actually need to use debt to drive and unlock the capital and enterprise of this country.
That was Bola Onadele, CEO of FMDQ OTC, on UBA's 30.5 billion naira bond listing.